So let's get to specific stocks that should be on your radar. Now, the great thing is after you come back from a 3-day trading break, there are lots of stocks to talk about. So we'll try and cover as many as we can over the next hour or so. I'm starting off on my watch list with Dr. Reddy's. So there was a news report saying that the company has laid off 25% of its senior staff. The company has clarified, saying that these rev-limit linked layoffs are completely wrong. They say the report that DRL has trimmed the workforce cost by 25% is incorrect. But what I think is important to note, and why it's still a thumbs down in my view, is that rev-limit paring down, that pressure is very much there on Dr. Reddy's. And maybe what this report says in terms of a workforce cut is just reflective of that. Look at what UBS is saying. They've maintained a sell with a target price of 1,140. They say over the past 3 years, Reddy's personnel cost increased from 18% of sales to 20% for the third quarter of FY25. We'll, of course, wait and see what comes up in the fourth quarter. The media report mentions downsizing in R&D, digital therapeutics, and nutraceuticals, those divisions. Ex-rev limit, the Q3 FY25 margins were 12% versus guidance of 25%, and thus impact is still low. Remember, that's a blockbuster drug whose patent has now run off, and that's one pain point and overhang for Dr. Reddy's. Symphony, on the other hand, a thumbs up, apart from the scorching heat, which is another reason why a company like Symphony maybe should be looked at. They've also had some news. They will be exploring a stake sale in their units, Climate Tech and IMPCO, IMPCO. They will be exiting from the Australia, Mexico businesses and investing in the USA. The reasons for the stake sale are high capital and resource intensity, diluting their returns on equity at a consolidated level. They want to focus on high profitable segments in India and export, and they think that the US market provides great opportunities. Interesting that they're moving to US at a time like this. Their estimate of enhancement of capital efficiency due to stake sales is something that they have given, and all of these are estimates. So they believe the revenues will be up 36% at 1,065 crores. Their EBITDA will be up 72% at 250 crores, and their PAT will be up 20% at 179 crores. So interesting point of view coming there from Symphony. I've given it a thumbs up. Macrotech. So this is interesting because it doesn't really impact the bottom line of the business, but the fact that the two brothers, Abhishek and Abhinandan, have now resolved their disputes takes off an overhang and could be a sentimental booster, if at all. Macrotech Developers will be continuing to own the Lodha brands, so no query there. Abhinandan Lodha will own the House of Abhinandan Lodha brand. Neither brother will have any rights or claims in the other's businesses. But as we're moving towards a lower interest rate regime, anyway, real estate as a domestic play is one to watch out for, and this could be a bit of a boost for Macrotech.
Speaking of moving to lower interest rate regime, the first stock on my list is HDFC Bank, and that's because it has cut its savings account interest rate by 25 basis points. Now, this is an important move. It comes in at 2.75%, and this is comparable with other banks in the industry. If at all, it's slightly higher maybe than State Bank of India, but there are estimates that have come through on the implications. Of course, you just simply look at the share of SA, that is savings accounts, in the overall deposits, and it means that the lower cost accounts for a reduction on 23% of the deposits for HDFC Bank, which is very positive, because usually when interest rates go down, you have a compression in the net interest margins, and to a certain extent, this reduction in cost should protect them to that extent. Jeffries has talked about that 23% mark, by the way. The stock has gained about 7% in a month, and that's more or less in line with the Nifty banks, if at all, just a little bit more than the Nifty banks gain. Goldman Sachs has come out with a note. It's maintained a buy with a target price of 2,087. It says that the savings rate revised down reflects confidence in liquidity and deposit accretion. Remember, this is a bank that has had to correct imbalances in its loan to deposit ratio. That is still underway. It has to get rid of high cost deposits and get more low cost deposits. Savings accounts is the lowest that it can get. The savings rate cut is set to ease margin pressure amid rate cut cycle, is what Goldman Sachs is saying. The second stock is Interglobe Aviation, and this is a thumbs up on the back of a Motilal Oswal note. It has upgraded its call on the stock to to a buy from a neutral, and it's hiked its target price meaningfully to 6,550 from 5,050. It says that it is the best domestic consumption play. We've spoken about this in the weeks and months prior to today, where you talked about the boost that it got from the Kumbh Mela, as well as domestic consumption and hospitality demand. This is a significant beneficiary of the upswing in Indian aviation, according to MOSL, and the strategic initiatives that they have announced will drive profitability going forward. There are multiple factors that have helped the company maintain profitability for the past 2 years, and these are set to continue to drive performance in the coming years. 65% or thereabouts share in domestic air traffic. The final stock is Zydus Lifesciences, and this is a thumbs up. There is, of course, an update on the acquisition that they had announced in March. But apart from that, there's also a US FDA approval for an anti-inflammatory, immunosuppressant drug. It's called deflazacort, and this is a corticosteroid that is used to treat autoimmune conditions as well as cancer. And the company also has said that it will incorporate a new French subsidiary, or it has, in order to house the Amplitude Surgical acquisition that it made. The remaining 13.4% stake in Amplitude, which is set to be acquired through an open offer, will be acquired by that arm. The announcement of that acquisition took place in March. If you don't remember, this had to do with a foray that the company is making beyond pharmaceuticals into med tech. And this is a company, Amplitude, that specializes in lower limb orthopedics. Initially, it's expected to be EPS dilutive, but eventually it's seen as a positive.
You know, another addition that I would want to make in terms of Indigo is a key beneficiary with regards to IPL as well, right? Because Indigo holds majority share in terms of market share in the domestic market, the boost usually comes in during the IPL season, which is on. Plus, they have a tie-up with Accor as well. So the kind of packages that they provide with regards to stay and flying is an interesting aspect. So you'll always see some bit of strength in terms of Indigo during the IPL season. So probably that could be a stock that one should be watching out for from Alex's list. But 3 stocks that I'm looking at, 2 on the back of an order win. Firstly is a Transrail, a small company, but they've backed an order worth almost 1,650 that was the March order in terms of 1,650 odd crores. But overall, if you see in terms of the current order, they are looking at a 1,085 crore order in the domestic market. This is in the transmission and distribution segment. Overall, if you talk about their unexecuted order book, that stands at around 15,600 odd crores. And in the month of March itself, they had bagged orders worth around 1,650 odd crores, and this was, in the T&D as well as the railway segment. The second one in terms of the order win side is Ashoka Buildcon. Now, this is the second major order win in just over a month with regards to where Ashoka Buildcon goes. If you talk about the details, they have emerged as the lowest bidder for 569 crores from the Central Railway. The order execution period for Ashoka Buildcon is around 30 months, and their order book stands at around 16,500 odd crores as on December 2024. What's interesting is in the third quarter itself, Ashoka Buildcon, in spite of a decline in terms of revenues, reported a strong third quarter, and this was only on the back of higher execution skills. And the stock has seen cuts of nearly 27% in the last 6 months, so there could be some bit of a potential upside that could be coming in on this one. And very lastly, from the pharma pack, you have Aurobindo Pharma that is in focus. Now, what's interesting about Aurobindo Pharma is that the company has been making its inroads in the US generic market, and that's the reason why this approval becomes important. They've got a US FDA nod for a generic of Xarelto. Now, what is Xarelto? This is one of the drugs which is actually used in terms of various treatments when you talk about strokes. They are eyeing a $447 million opportunity from the US market with regards to where Aurobindo Pharma is concerned. And this is only an opportunity with regards to a 2.5 mg dosage. Once they've got a tentative approval with regards to 10 mg, 15 mg and 20 mg strengths, once they launch that, the opportunity size really increases for the counter, and that is almost a $8.5 billion opportunity, and that's what the estimates are indicating. So far, the company has 550 ANDA approvals that have been filed. 521 is in terms of final approvals and 19 are with tentative approvals. So Aurobindo Pharma, again a thumbs up. The 3 thumbs up stocks coming in on my radar as well.